As soon as the CPI inflation number came out, that was it. It was time to buy Tesla. As soon as it held that level, people familiar with our trading system know that that's our buy area, and that's what we did on the live call. Hey everybody, in tonight's video, we're going to go through 5 stocks that you should be looking at tomorrow, what exactly happened and why it's so significant with the CPI number. I really want to focus on that. As always, subscribe to the channel, click all notifications. Also, we do these live shows and we're going to start doing them where I'm essentially live trading or calling out what I'm doing real-time pre-market during CPIs. We did today. I'm going to link that video at the end so you can just watch that. But you're going to want to subscribe and click all notifications, if nothing else, just to get some information and to learn. But in regards to Tesla, it's definitely one that needs to stay on the list. I have the pre and post in. Let's get rid of that for a moment and just zoom out. Does that look familiar to anybody? That is what? That is about as close to a dragonfly as you can get without being a dragonfly. Some people will call it a what? They would call it a shooting star or an inverse shooting star. But essentially, a dragonfly is open closed at the high. We're not exact, but we're there. So what we're going to see is how this acts tomorrow. I'm watching that 191. I currently have a position on in this, as well as options. I think what we saw today was a lot of selling in the name based upon the CPI data, which I really want to go over in a moment. It won't be very boring, but there's some real nuggets in there to take away and some things that Coleman said that are really very important. I think it's why we fueled today. But I think it's really, really important to get this. But this is what we dealt with this morning. Okay, this is really what we dealt with. We opened up and we came all the way back down. We actually were long this pre-market and then going into the morning and then just sold it, bought some puts and did actually okay with the puts, closed them and then just got out of the way. And then the flim-flam started. But I do think that it might be Elon that's still selling in here. I'm speculating. I have no way of knowing that. But that Form 4, he's a little talkative guy, isn't he? So the fact that he's not saying I'm done selling makes me think that statement's coming out soon. And maybe that's why we're up $1, $1.50 right now after hours. And we're seeing buying in the name. So we'll see how that plays out, but this should definitely be on your radar for tomorrow. I do think this plays catch up. I know that it still had a great day. By catch up, I mean from the opening price on up. This can get to 208 in a heartbeat on a decent market, especially if the short covering continues to pick up. Let's go through the CPI. Now, core CPI. We went through this in yesterday's video, and I outlaid my case for what I thought. And it's very interesting because what I thought still happened, but the other side was so damaging. In other words, it was so much lower, and we're going to drill into this. But core CPI 0.3 versus 0.5. This is significant. This is absolutely huge, okay? Just to put this in perspective, forget about the forecast and look at the previous, okay? So now inflation is growing at half the pace it was a month ago, right? Inflation is growing at half the pace it was a month ago on anything that is not food or energy. Of course, CPI came down. Well, that sure makes sense because this came down. So obviously this is going to drop more, okay? CPI month over month, that came in at 0.6 versus 0.4, 0.77 versus 8, okay? 7.7 versus 8. If you go look at all the analysts and all the economists on the street, no one had a 7.7 number. Nobody was even close. So this is really significant and it really blew off what everybody was looking for. This was not even close and that's why you saw the action. Everybody was out of position. Now let's look at this. The government issues a report and literally breaks it down line by line for us. And I think this is important just to look at September versus October and look for some standouts. So for me, the food at home going from now is 0.6 versus 0.8, 0.7 versus 0.4. Food away from home, meaning takeout and dining out is dropping, right? That's significant. Now, going into energy, look at fuel oil, okay? Negative 2.7, right? Now you're at 19.8. So that was higher. Gas was higher. Okay, this is what's so interesting to me is despite how much higher fuel oil and gas was, didn't matter. It wasn't effective. If you go look through energy services and you come down and you take a look at utility, piped gas, negative 4.6%. So you can see why natural gas might come in on those numbers. And maybe that's something that we should talk about in a later video is how to play that. But used cars, negative to 4%. These are the kinds of moves that are substantial. I mean, you have to realize this is a month-over-month number, and that's what you're down. Okay, so that's double digits for the year easily. And when you start to see those, medical care costs are coming down. So when you're starting to see these moves down, 1.9 versus 0.8 in regards to transportation services, 0.7 versus 0.8, shelters up a little bit. So we had the big ones that were affecting us last month still affecting us. But this is what Goldman said about it. Goldman reiterated their position, which I thought was kind of interesting because this would have given them a chance to be a little more aggressive, but they weren't. Economists' 5% hike includes 75 basis point this week. This is from before. Okay, this is the last Fed meeting, and they reiterated this statement today. 50 basis points in December and 25 basis points in February and March. Okay, so they're saying that they peaked. This number is suggesting that they peaked. Why is that important? It's important because back here is when we started to see signs that inflation might be a problem. This is when we started to see signs, and then we came down, traded back up, right? This is when we started to have those problems. We might not be buying bonds anymore. We're going to have to raise rates. This was, we're going to have to raise rates, January 4th. Now, you hear that and you see that, and you see the action that took place. You know that inflation was the driving force behind this. Everybody's aware of it now, right? So would it make sense that if inflation peaked, that the majority of this could be over? Now, bear markets do not just stop. This could take years of up and down. But just listen to what I'm saying. The stability is going to come from inflation and getting rid of inflation. Okay, and so now you're seeing this CPI number. Look how we acted. Look how we acted on this CPI number. Maybe somebody saw something in this CPI number they really liked. Maybe they drilled into that line by line like we just did, saw something they really liked. Bottom line is this the bottom? Nobody knows. But I will tell you this, the fact that you have these kinds of readings coming out right now, and let's assume it's not an anomaly, if you have these kinds of readings and they continue, this market will go higher because it will mean that we have had peak inflation and we will have peak rate hikes. And that's really important. I can do more on this on Saturday's video. Please comment if you like this kind of macro view or you just rather me just get right into the stocks. But I think it's extremely important for you to understand what's going on, right? Because a lot of people are looking at names and they're not getting it, right? They're looking at Amazon and going, that's ridiculous, I'm not buying that. But if you understand what I just explained, you would understand that consumer discretionary stocks move solely on core CPI. That's going to be their driving force, right? And core CPI was half of where it was a month ago. That's exactly what you want to see. This was something that we actually bought in the trading community today, did exceptionally well with, okay? And it just keeps on going on. And there were several names like this. This was another one we did live on the live stream today, which was actually a lot of fun. So if that's something that interests you, you might want to subscribe to the channel so you get the notifications. I believe that's how you're notified. But this was really a very simple trade for us, and did it right live where, okay, here's my 1 minute bar, broke over the 1 minute. We saw how we responded to it. I found this fascinating, and this tells you a story. So I'll give you a really quick pro tip. What you do is you measure the first minute bar, then you put fib levels on, and then you look at those fib levels and see where the retracement comes down to, right? Because that's all algo, right? We know that's all algo, right? So basically what we're trying to do is figure out what the algo's doing. And they're going to go off some kind of mathematical kind of calculation, obviously. So what we're doing here is we're measuring how much they're willing to go down. And they weren't willing to go down. So what does that mean to us? We can use that information against them. So then we know that when it pops out of here, we know what's going to happen and we know where support is. So it's really important, but consider that and listen to it again, because I know it's a lot. So the question is, what now? We're going to have to see how tomorrow plays out. You have the bond market closed, and I do want to address that in a moment. But these names like NVIDIA, and people are saying, well, this is over. The people that are saying this is over, the people that did not invest today, the people that are saying this is over are saying that they don't understand what inflation is, okay? People that are saying this is a one-hit wonder don't understand what happened today. I hate to be that blatant about it, but that's exactly what it was. And it doesn't mean that the bottom's in, but to say that this is just another day of short covering means that you really don't understand the macro picture of what's going on out there. That you couldn't say it any clearer, right? If that's what you're saying. And let me give you an example of where I'm going with this, okay? This is the 10-year treasury. I know people say, don't look at the 10-year treasury. Don't chart yields. I chart everything. So you can chart the bond side of it. I'll chart the yield side of it. It's 6 1/2. So here you are and you're sliding down. Here's your break, right? It's not rocket science, right? You can see it. Shoulder, head, right? Breaks a neckline. Head and shoulders do not need to be straight, okay? Nevertheless, here's an H if that makes you feel better. And there's your crack, all right? So just so we're clear, we came in and we had a 414 on the 10-year, right? We're now at 383. And you're going to tell me it's short covering? You couldn't explain quicker that you don't understand macroeconomics besides stating that, okay? And I hate to be that cavalier with it, but this is a really important point for everybody to get. Same equation that I've been trying to drill. Hopefully people are getting it and I'm drilling it in their head. Comment if it's getting old below, okay? Weak dollar, okay? You get a weak dollar, which is what we have here. And then if we get the weak dollar, what does that lead us to? If we get the weak dollar, that leads us to bond buying. Yields drop when bonds get bought. If that continues, okay, stocks rise. You think it's a coincidence that the market's up about 6% and the bond market and the yields down about 6%? It's not a coincidence. So keep that in mind. I would tell you to continue to focus on semiconductors. Okay, there's a reason why Morgan Stanley came out and said to put this on their top list and that we're going through an upcycle. This is from the newsletter. There's a free version of the newsletter below. Also, when you sign up for that newsletter, there's a spot for the wait list. If you're interested in joining the trading community, it's currently closed and it's wait list only. So, and that's at link in description. I'll put a link up here in the top right too. But point that I'm getting at, no one knows what's going to happen. And I want to walk you through something, okay? When this triggers and it comes down and I'm up like $30 on the day, I'll trim or sell right into this. I'm not going to second guess my day because I don't know if we're going to gap fill. And that's the point I want you to take away from this conversation. We can all talk and we can all have our opinions, but there are no gurus. Nobody really knows what's going to happen. We formulate a hypothesis and then we act on that hypothesis, right? But we really want to trade what's in front of us. So instead of telling the stocks that it can't go any higher, maybe try to understand why the stocks could go back to 2022 in the next 3 to 6 months. And if you can't think of a reason why this is going to do something like this or has the ability to do something like this, then you couldn't possibly fathom why it did this, right? If that makes sense. How could it go down 71% in 2 months, but it can't go up 71%? I think that's really important for people to grasp. So I would focus on semis. I have a litany of other names I could spend time on. I'm going to do a Saturday video on how you should be positioning yourself. Again, if you need anything, please reach out. Please comment if you like how I did more of the macro picture in this video. I will put a link up here for the wait list and trade to win tomorrow. Remember, bond market's closed tomorrow.